Discover what full-service broking can do for you with Sharekhan's daily 3-hour Research Actionable Update.
Hello friends, this is Avinash here. Welcome to Sharekhan's 3-hour Research Actionable Updates. 3R means the right sector, right quality and right valuation. In today's podcast, we bring you an update on Transport Corporation of India, Macrotech Developers and SRF Limited. First, we start with Transport Corporation of India. Analyst maintains buy on Transport Corporation of India with a revised price target of Rs 855, factoring upwardly revised estimates and healthy growth outlook for its key verticals, viz. Freight, supply chain management and seaways over FY21 to FY24 estimates. The company reported a beat on net earnings for Q3 FY22, led by a strong operational performance by seaways and low interest expense. Transport Corporation of India retained its revenue and profitability guidance for FY22, with seaways performance expected to remain strong during Q4 FY22. The company deferred its ship acquisition plan due to the current high cost. GST compliance and Transport Corporation of India's strong nationwide network is expected to gain market share going ahead. The company's low leverage and high operating cash flow generation is expected to maintain its balance sheet strength. Next update is on Macrotech Developers. Analyst retains positive view on Macrotech Developers Limited and expect an upside of 18 to 20% given its strong launch pipeline and high cash flow surplus. The company reported a strong beat on net earnings led by better than expected operating margins and lower interest costs for Q3 FY22. Lodha grew its pre-sales and collection by 40% year-on-year and 45% year-on-year during Q3 FY22. It executed 6 JDAs with a gross development value of approximately 10,000 crores. It retained Rs 9,000 crore FY22 pre-sales guidance. It expects meaningful deleveraging through strong operating cash flow generation, monetization of digital infrastructure park, surplus repatriation from London projects, and further equity raising to meet minimum promoter shareholding norms. The analyst maintains a buy rating on SRF with a revised price target of Rs 2,800, as the recent stock price correction provides a good opportunity as we expect strong earnings momentum to sustain, led by strong demand, margins in HFC refrigerants, high growth in specialty chemicals, and continuous high capex intensity. Q3 FY22 results were solid with a sharp beat on revenue, EBITDA led by the better than expected performance of chemical, packaging film segments. Management guided to exceed 15 to 20% revenue growth guidance for specialty chemical segment, sustain strong margin fluorochemicals business, and plans to have a cumulative capex of over Rs 4,000 crores over FY22 to FY23 estimates. We have increased our FY22 to FY24 earnings estimates to factor in higher REF gas margin and high growth in specialty chemical businesses. We expect SRF's premium valuation trade at 34x to 28x its FY23, FY24 estimates EPS to sustain given the strong growth outlook and favorable dynamics of the Indian specialty chemical space. That brings an end to today's podcast. Thank you for listening in. We would love to hear your valuable feedback in the comment section. For more detailed disclosures and disclaimers, please refer to our research report or contact our nearest branch. Please read the risk disclosure documents issued by SEBI and relevant exchanges and terms and conditions on sharekhan.com before investing.
Tune in again tomorrow for a new podcast on Sharekhan's 3R Research Actionable Update. Click on the subscribe button and never miss another update from Sharekhan. Investment in securities market are subject to market risks. Read all the related documents carefully before investing.